So this strategy, I'm not gonna lie, is extremely boring, but it allows me to collect premium from the stock market, whether it goes up, down, sideways. Let me show you a live example. All right, so here's my public portfolio. I deposited basically $5,000 into this account, and we're gonna see what happens with it, right? And I have 3 positions here, and I'll quickly refresh to show you guys I'm actually running these positions. So I have 3, American Airlines, Fiverr, and Snapchat. Now, these are called cash secured puts. So what I'm saying here is I'm willing to buy 100 shares of American Airlines at $11 at the close of August 22nd. Now, I collected $42.64 of premium. Now, I did do 2 contracts here, so each one was $21.32. That's how that added up to $42.64. Now, there are a couple things that we need to understand about this, right? I locked up my capital, right? You can see I opened this trade on the 24th, and this is happening on August 22nd. So I'm not really doing much. I'm kind of just waiting to August 22nd. Now, a few things can happen. Let's say American Airlines, right, is trading above $11, right, on August 22nd. Well, if that happens, right, my contracts, right, my 2 contracts here, right, they will expire worthless, right? Obviously, I collected this premium total up front, right? But my money, my $2,200, right, because these are, a one contract is 100 shares, right? My $2,200 would be returned back to me on August, at the close of August 22nd, and then I can run the play on another opportunity, right? It's essentially kind of putting my money to work and collecting premium. But the second thing that can happen, and this is the big risk of this, is let's say on August 22nd, American Airlines at closes is trading at like $10. Well, if that happens, guess what? I have to buy my 100 or my 200 shares, since I have 200 contracts, at $11, right? But I kind of like to look at this as, hey, dollar cost averaging into stocks that I like. So I did the same thing on Fiverr. I have $20 puts. So 20 put, again, I'm willing to buy 100 shares of Fiverr on September 19th for $20, right? If it's trading at $20 or below. Now for this one, right, I wrapped up $2,000, right, just a single contract, and I collected $54.33. And then even Snapchat. Now this one was a little bit more riskier play for me because it was earnings week, but you know what, I still like this company. But this one I collected $17.32 for locking up $750. Now, obviously, guys, the premiums I'm showing you are for educational purposes only. They're constantly changing. These are just the premiums that I got. There are right times and wrong times to do this strategy. And the cool part about it, guys, is a lot of people, they stress out like, oh, what if I have to buy my stocks? Well, I don't really stress out about it, because even if I have to buy, like, let's say my 200 shares of American Airlines, what I'm going to end up doing is I can then do something called covered calls, where instead of locking up